Good afternoon, everyone. I hope everyone is awake and alert. Great. As Sunil pointed out, this is a difficult time of the day to present since everyone has had their lunches. Anyway, so I would like to, in my presentation, offer a slightly different perspective. I think we've spoken a lot today about AIFs, which is synonymous in our context with category 3 AIFs, and markets to mean predominantly public markets and equity to mean listed equity. So I'd like to slightly change gears a little bit and offer a slightly different perspective to AIFs and alternative investments and take a slightly different view, which means to really talk about global investors and how they view alternatives as well as private markets versus public markets. So why do alternatives as an investment avenue exist today? They offer, different things to different investors, but they have a unique purpose to offer. And for some it is diversification, and depending on what the investment objective is, they will choose a different asset class, and all those asset classes are available today globally. So if somebody wants high risk-adjusted returns, for example, then they will choose private equity and venture capital, and to some extent even private debt. Or if someone wants an inflation hedge, then they can choose real assets, which means real estate, infrastructure, natural resources, etc. So there are different asset classes which meet different objectives for global investors. And global investors typically choose their asset classes depending on what their objectives are. How have globally alternatives grown? They've grown at an exponential pace. They've grown in the last 10 years by 3x, which is really phenomenal. And if I just look at the next 5 years, they are expected to grow by 2029 to $29 trillion, which is an exponential growth rate. And this growth rate will be driven by certain asset classes more than others. So private equity and venture capital, private equity in particular, both growth and buyouts, are expected to dominate this investment landscape, which is going to account for almost 12 trillion out of the 29 trillion in the next 5 years, followed by hedge funds, which is going to continue to remain a very important asset class in alternatives. So we are going to experience an exponential next 5 years growth in alternative investments. Particularly in the alternative investment landscape, fund manager selection is particularly important compared to traditional asset classes, and the dispersion of returns, if you look at between traditional asset classes and alternative asset classes, is very wide in alternative investments. So therefore, this highlights the need for investors, particularly global investors, to choose the right manager, right fund manager. And hence, highlights the importance of also due diligence of the fund manager. And for us as fund managers to also, apart from delivering high returns, also to maintain high standards of risk management, governance, corporate governance, etc., so that we can actually pass the test and come out strongly in terms of manager selection. What are the key factors which are driving this exponential growth globally in alternatives? I've covered some of these sectors, some of these points earlier, but seeking alpha is a big reason for it, and uncorrelated alpha, because it's very important to have uncorrelated risk-adjusted returns from a global investment perspective. And therefore, we are seeing the shift from public to private markets, and that's really one of the things that my themes that my talk today is really how investors are shifting from public to private for diversification. And there's also a demand for non-traditional avenues compared to the listed and liquid alternatives. There's also an emergence of private wealth channels, family offices, high net worth individuals, etc., which are adding to the growth of alternatives. Institutional investors have all increased their allocation towards alternatives. Then there's this emergence of this new strategy here called ESG and sustainable investing, which has given emergence to a new breed of fund managers across markets. And also emerging markets have again grown with, with really star fund managers across each of these markets. And the other thing is exits. There's a robust secondary market, there's a robust IPO market offering exits, which is all fueling the growth of alternatives in India. So shifting gears now a little bit to the Indian landscape, I think we've heard a lot about how alternatives have performed in India by some of my fellow speakers, but in India also we've seen pretty much exponential growth. The market has grown, almost at a CAGR of 92% to 12 lakh crores in the last 10 years. Just the last 5 years has seen 2x growth, which is really phenomenal. And a lot of this growth has been in category 2, which is really the private markets, which is really dominated by things like private equity, venture capital, real estate, etc. If I just look at venture capital as an example, India is the largest market in the APAC region for venture capital. And again, when you look at the Indian context, global investors continue to dominate the AIF landscape. We've seen, for example, venture capital. I took the example in my previous slide. Venture capital has generated a return of 24.6%. That's quite staggering. And what other things that India offers? It offers lower volatility. It offers, of course, high returns, a stable regime, a vibrant ecosystem, especially in venture capital and private equity, and efficient compensation for the risk that they're taking to invest in. And we've particularly seen this high inflows in category 1 and category 2 AIFs. So therefore, all eyes are on India. I mean, we all know the reasons why, the demographics, the rapid economic growth, the stable regulatory regime, a vibrant IPO market, secondary market, all reasons to focus on India. And if I just look at, the emerging markets, globally, if I look at emerging markets, India is clearly poised to be the best, the rising star among all emerging markets across the globe. Shifting gears again a little bit to the regulatory lens of which investors invest. Of course, there are certain pain points that investors have faced in the past investing into India, and that has been a little bit of a pain point, particularly stemming from regulatory concerns and tax concerns and the tax complexity actually more than anything else. But the Indian government has come up with a very robust answer to this by bringing about the GIFT regulation, and the GIFT regime offers a perfect solution to all these issues that global investors have faced in the past, particularly when it comes to a stable regulatory regime, tax incentives, low cost of doing business compared to all the other jurisdictions used by global investors such as Singapore, Mauritius, etc. So GIFT offers a lot of advantages and is the perfect solution to some of these pain points. So I'd like to talk about ourselves, Nippon Alternatives, us being part of a Japanese conglomerate, Nippon Life Insurance. Our lens is more towards Japanese investors, and therefore we have more experience dealing with Japanese investors. So I'd like to offer a little bit of perspective with how Japanese investors look at alternative investing. For them, of course, track record is king. It's extremely important. They're very focused on not just financial returns, but also strategic returns. They are also focused on doing a thorough due diligence of the managers throughout the life cycle. They remain engaged throughout the fund life cycle, and very consistent, look for very consistent performance rather than high alpha during short periods of time. And longevity is very important to them. And particularly, I would say that Japanese investors are very good at pricing the risk, because that means they're not necessarily looking at high returns or looking at low returns given in a stable risk environment. They're actually looking for the optimal return for a given amount of risk that they're willing to take. So the Japanese investors are very adept at this, and they've done that very successfully, and we've experienced that. So I'd like to talk a little bit about the Indo-Japan corridor and how that has worked And I'll give you two examples which have worked very well for us as Nippon Alternatives. One is in venture capital. In venture capital, Japanese economy has largely been industrial. But they've been seeking an innovation. They've been seeking technology, the right technology at the right price, and hence, and India, on the other hand, is a frugal innovation hub and the third largest VC ecosystem in the world, after the US and China. So what we found is that that we could actually bring Japanese investors a solution to this particular problem, and we created this fund of funds which offers Japanese investors allocation to more than 300 underlying startups. And all of these startups have something unique to offer these investors. So we've been able to do that successfully and tap the Indo-Japan corridor on the technology front. Similarly, we've seen a success story on the real estate side, where we've been able to generate significant returns in the real estate sector for Japanese investors. Japanese investors in their home markets typically invest in commercial real estate, where they see 4-5% returns at max. Here in India, we've been able to offer them 16 to 20% returns in a very stable, risk-managed manner, and in residential real estate, which is, of course, the predominant part of the Indian real estate sector. And we've been able to launch several schemes, several AIFs, only for Japanese investors, and they keep coming back for more. So here now I will talk to you about our platform. This is what we do. We have a very wide platform of alternative investments across, I would say, the risk spectrum. And I think we have something for every investor. Be it a domestic HNI investor or a foreign investor, we have something for everybody depending on their risk appetite and depending on their return requirements. So we have a very wide platform starting from private credit, real estate I talked about already, listed equity, we have a strong presence. We have 9 running schemes. In real estate, we have 4 schemes. In venture capital, we've done our fund of funds. Now we're going to launch our second fund of funds, as well as a direct venture capital fund. So we have a very wide offering for every type of investor. And also we are adding a GIFT City presence, or rather we've added a GIFT City presence, which allows global investors a new forum of investing, a new way of investing, a new route of investing into all these asset classes that we are present in and that we have been doing over the last decade or so. So that's really it from me, and I would like you to sort of spend some time and speaking to some of my colleagues here and looking at our materials outside in our booth and seeing, learning a little bit more about our platforms and how we can work with you to provide you a robust investment solution. Thank you very much.